Investing might sound intimidating, like something only rich people do, but that's just plain wrong. You don't need a fortune to start investing. Even with just $100, you can begin your journey to financial freedom. Think of it like planting a seed. That $100 is your seed, and with time, care, and regular investing, it can grow into a strong financial tree. Starting small is a great way to learn the ropes without risking too much. It takes away the fear factor and allows you to get comfortable with the process. As you learn and gain confidence, you can gradually increase your investment amount. Every successful investor started somewhere. Your journey to financial security can begin today with that first $100. Let's break down those barriers and start growing your $100 seed together. Before you jump into investing, it's important to understand some basic terms. Don't worry, we'll keep it simple and straightforward. First up, stocks. When you buy a stock, you're essentially buying a tiny piece of a company. If that company does well, the value of your stock goes up and you make money. Next, bonds. Bonds are like loans you give to the government or a company. They promise to pay you back the loan amount plus interest. Bonds are generally considered less risky than stocks. Now let's talk about mutual funds and ETFs, or exchange-traded funds. These are like baskets of stocks or bonds. Instead of buying individual stocks or bonds, you're investing in a diversified collection of them. This is a great way to reduce risk. As a beginner, it's best to start with simple, low-cost investments like index funds or target date funds. The important thing is to understand the basic building blocks of investing before you start building your portfolio. Ready to invest that $100? Great! Here's a simple, step-by-step guide to get you started. First, choose an investment platform. There are many beginner-friendly options like Robinhood, Acorns, or Stash. Next, open an account. This process is usually quick and straightforward. You'll need to provide some basic information. Then, link your bank account. This allows you to transfer money to and from your investment account securely. After that, choose your investments. Start with a low-cost index fund or ETF that tracks a broad market index, like the S&P 500. Finally, set up automatic investments. By automating your investments, you ensure that you're consistently putting money into the market. Choosing the right investment platform can feel overwhelming, but it doesn't have to be. There are many excellent options designed specifically for beginners. Robinhood is a popular choice for its commission-free trading and intuitive app. Acorns allows you to invest your spare change by rounding up your purchases and investing the difference. Stash offers a variety of investment options, including fractional shares, which let you buy portions of expensive stocks. When it comes to choosing your investments, focus on low-cost index funds or ETFs. These funds track a specific market index, like the S&P 500, providing instant diversification. Vanguard, Fidelity, and Schwab are all reputable companies that offer a wide selection of low-cost index funds. Remember, you don't need to be a financial expert to start investing. These platforms and investment options make it easy and affordable to get started. One of the most important concepts in investing is diversification. This simply means spreading your money across different investments to reduce risk. Imagine putting all your eggs in one basket. If you drop the basket, you lose everything. But if you spread your eggs across several baskets, you're less likely to lose everything if one basket falls. Diversification helps to protect your portfolio from market fluctuations. When one investment is down, another might be up, helping to balance out your overall returns. You can diversify your portfolio by investing in different asset classes, such as stocks, bonds, and real estate. Within each asset class, you can further diversify by investing in different sectors, industries, and geographic regions. Diversification is key to long-term investment success. By spreading your risk, you're more likely to achieve your financial goals and weather any market storms that come your way. The earlier you start investing, the better. This is because of the power of compounding. Compounding is like earning interest on your interest. Over time, even small amounts of money can grow exponentially. Let's say you invest $100 today and earn an average annual return of 7%. In 30 years, your investment would grow to over $750 without adding another dime. That's the magic of compounding. The key to long-term investment success is to start early, stay invested, and be patient. Don't get discouraged by short-term market fluctuations. Remember, you're investing for the long haul. Investing is a marathon, not a sprint. By starting early, diversifying your investments, and staying the course, you can achieve your financial goals and secure your financial future. Take that first step today and watch your $100 seed grow into a mighty financial tree.